Hello everyone, Sam is here from myforexmagicwave.com, making this small video about USDX and its use and what happened to my before chart. Alright, so first thing I want to show you how this it is based on what are the basic studies where you can find or expect or predict the future move. The number one study is Elliott wave. Okay, very precise if you understand and apply. It's very good. And out of that comes harmonic patterns. They are nothing but Elliott wave in a specific form and places. For example, this is Elliott wave, and this diagram shows the interaction between Elliott wave and harmonic pattern. Elliott wave structure and where this harmonic pattern or patterns appears. Location is very important. So, for example, this Elliott wave wise, this is wave 1, this is wave 2, this is black count, this is wave 3, wave 4, and wave 5. So this makes up an impulse wave, consists of 5 subwaves. Then followed by a correction A, B, C fashion, 3 waves, A, B, C. Now, if you notice that I have drawn this harmonic patterns here, one is here, one is here, one is here, all 3 different patterns. Here, the two very common patterns are bat and girdle. They are like retracement patterns, and butterfly and crab are uh, extended patterns. Okay, so this is where between wave 1, 2, either one of them, either bullish bat or crab can appear, and then you will see a wave 3 coming in. And as it is ending after wave 3, between wave 4 and wave 5, it ends the impulse move by making most of the time either butterfly or crab pattern. Butterfly most likely. Okay. Once in a while, then move is very fast, then or momentous, then you see a butterfly, a crab pattern. But usually it's a butterfly. Okay. Extended pattern means this wave 5 goes beyond the point of wave 3 or starting point of wave of this pattern, followed by A, B, C correction, and then you will see between A and B, you will see again these retracement patterns, but in the opposite direction, bearish. First starting move to the upside was bullish, and now you will see a bearish because the price coming down. So this is where you will see a bat and girdle again between A and B, and followed by wave C. Okay, so far so good. And this diagram, all of my subscribers have, and I teach this for years and years. I've been teaching this. So let's see what happened now in USDX. This is the chart I made on 21st and sent out to my subscriber and explained it in the webinar. These horizontal lines are SNR levels mentioned by these numbers. Okay, and taken from higher time frame. And see, the fib was drawn from here to here, and I said, okay, in Elliott wave count, this is probably wave A, this is B, and we will followed by C. And in doing that, this is like after finishing A, wave A, it is trying to go for wave B, but wave B will go in this fashion, like this, A, B, C, D, right? A, B, C, D, and then comes down. So we were here when I made that chart, right? You see here, this is A. Then we're supposed to come down here for B and then go for C around 78% of this draw, and that will make a girdle because the first pullback is 61%, second pullback is 78%. And let me show you how girdle looks like and what is the calculation of a girdle pattern. If I have it here, this is bearish girdle. You see, exactly that's what it made over there. XA, then B is around 61%, then it comes down in between these A and B area, most likely 23% of the same fib from X to A, and then it goes for point D around 78% and then drop. Okay, so that's why I made the chart that this is probably going to happen. This is at 61% now, so it will come down to 23%, then we'll go to 78%, and then will drop. Okay, and obviously while it is doing this up and down moves, all the USD pairs will be doing up and down moves. So what happened is that if you know the direction, for example, here that is going to drop here, that means USDX will be getting weaker. And if USDX is getting weaker, then all the USD pair where USD is on the right hand side will be going up because of that. And if the USD is on the left hand side, those pair will drop. So you have kind of a pick and choose kind of situation. Just by knowing this index, that where it is going, if you can catch this right direction, you have now several, I think it's like 7 or 8 pairs involving USD. And then you can pick and choose that which one you want to trade, which one is moving faster, which one is making some sense and in your direction, and so on and so forth. So it becomes very easy. So now let's see what happened to this chart of mine and how the market reacted after this chart. This is my final chart as of today, Saturday, July 30th. So from here, from point B, we'll drop here. I was thinking about 23% that, and then we'll go up, but instead of that, it went up, but it came down because of some news to 11.4 line of the same fib, and then it went up to straight to 78%. That's where I mentioned that it's gonna go and finish up a bearish Gertley pattern. And from there, you can see that it start dropping already. If you pay attention to this simple diagram of this, that's what it is. It's gonna get to the 78% and then start dropping. Okay, but knowing this pattern alone is very good. Okay, if you know this pattern alone and if you can catch it, fine. But knowing in terms of Elliott wave that where the heck this pattern is playing out is also very important, because you can then catch a lot of pippage. So this is where you can see that actually this is what's happened. But yeah, this is the one, right? So basically now you can see that we were at the end of wave 5, and this is A, B correction, and then C will come all the way down to maybe 61% or the height of wave 1, the previous wave 1. So let's go back and take a look that what are we talking about. So we, in this chart, we cannot even see where the height of wave 1, right? So let me go and regular USDX chart. What is this? USD 4-hour. Oh, no. Euro USD. I want to see monthly, weekly or monthly chart. Okay, this is my weekly chart, right? So you can see this. This is a sort of wave at the end of wave 5. This wave 3, wave 4, and wave 5, right? And then this is A, B, and C. We need to get around 61% of this whole thing, which is, even if you take from here, which is not the case, but for example, this is wave 3, this is wave 4, this is wave 5. So this is wave 2, and this is wave 1. Starting from here, that would be a long way. But let's see. And up here. So you see, what happened is that 61% is coming here, which is a long way from there. So now you see, even if you can say, okay, yeah, I caught this bearish bad pattern and I'm, trading it very nicely, and somewhere here you'll probably stop. Yeah, okay, enough is enough. A lot of pippage, it might go up again. But knowing the bigger picture, you know that no, it's not the case. This is A, B, and C will come exactly, maybe at least equal to wave A, which will be around 61% here. So let's see if it is. If you can just measure this, take this, and from here, so 100% is coming at 50%. That's also fine. Or maybe 127% will come to 1.618. Let's measure that quickly. If we are dropping from here. So you see 127% is coming right in the vicinity of 61.8%. So this is a long way, folks, that we need to go in your USDX. Now, what really happened? What is the effect, and then how you can implement? So, for example, I'm not gonna show you a lot of from all the way back, but recently, let's go recently. This drop from 78%, and the drop started when 7/27, July 27. Then we started to play out this bearish girdle on USDX. So USDX start getting weaker on July 27, right? At the end of July 26, beginning July 27, USDX start getting weaker. So USD pair where USD on the right hand side should go up. Let's see a couple of pairs that if really that happened. So for example, Euro USD, let's see what happened since 27. Did it go up? So here you see this 727 is starting from here. And that is exactly what happened. USDX went up. So if you had known that girdle is ready to play out in USDX, you would be looking for long here, and as soon as you see a move to the upside, you could easily get in and make all this pip. Similarly, if you look at the Aussie USD, 727 was here and the pair went up. Now, let's see a couple of pairs where the USD was on the left hand side. Those pairs should be going down. So USD yen, USD is on the left hand side. So let's see what happened on to that pair. From 27 it went down straight because of the USD weakness. And similarly USD franc, the USD is on the left hand side. Should it good? It went down, yeah, it should, and it did went down, right? Exactly from this is 727, the starting USD franc, USD weakness, and all the way down. So you see, knowing only the index that okay, it is gonna drop, and the pattern is finished there. And if you watch that, let's say on your, if I have it here, let me see, if 4-hour chart, the way I have it, for example, right here, okay. So you make this 4-hour chart, and then you see, you know, it is gonna make a turn from that 78.6 percent level, and then you get ready. And this is a 40-minute chart, and this is actually market is closed right now, so you're not seeing the correct chart. And but you can see here on 20-minute chart you have entries, a lot of entries just to go down. This is here, one here, one here, one here, and then keep going down. Okay, so this is the effect of knowing USDX correctly, that where the heck is going to go. This is a weekly chart, and you can see my monthly chart. Actually, this is wave 1, this is wave 2, this is wave 3. Well, I would say from here, A, B, and this is like wave 1, 2. This is wave 3, 4, 5. Now this is A correction, then B, and now we started to come down, and probably this is where the final target would be. Okay, so this is how my before and after chart. See this before and then after. It is going exactly the way I said it will go. From here, it came down all the way here in 3-wave ABC, then it went again in 3-wave ABC, exactly to 78%, finish up a bearish girdle, and it's starting to play out. This is just the beginning of this girdle playing out. It can go long way. So this is what I wanted to show. If you guys are interested to learn all of this mumbo jumbo, and you know, where to get these index charts, and how to make these candles and these charts. Okay, this is very these are not regular candles, but they are very precise, they're very perfect. They are not time based, they are amount of pip based, but they give you precise entries. Okay, blue 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 going retracing into the wave, and then start coming down as a red candle, and you open a trade. Simple as that. Okay, so this is it for now. If you want to join and learn, I do webinar on a weekly basis, probably 2-3 webinars a week, and teach you everything and give you all these indicators and whatever you need. Everything is a total package. And then you attend my live webinar. Email help is always available. You can email me with any question. Okay, so this is it. If you like, go on my website, subscribe, and get ready for the next week. Okay, so this is it for now. Thanks for watching. Have a great day.